when you purchase E&O policies, it's important to remember and understand the consent to settle provision, which is also known as hammer clause or softened hammer. So with a hammer clause, a variation of a settlement opportunity or hammer clause that's most favorable to the insurer and requires the insured to pay for all defense costs and damages that exceed the recommended settlement offer, versus a softened hammer, also known as a velvet hammer. This is a variation of the settlement opportunity or hammer clause that's more favorable to the insured and requires the insured to pay a smaller portion of percentage of the defense costs and damages that exceed the recommended settlement. Some policies contain variations of the settlement provision that allows the insured to settle a claim that falls under the policy's SIR amount without the insurer's approval. So I know this is a lot of words, but let me explain this. So typically the consent to settle provision within the policy, the insurance company will defend it, and then typically in most cases before it goes to trial, they'll try to settle it, and there's times when the insured might not want to settle because their reputation is on the line. They just believe that they weren't wrong and that they want to not agree to the insurance company and the law firm's settlement agreement. In that case, if there's a hammer clause, it won't allow them to have any money above the settlement amount to offset claims outside of the settlement agreement, versus a softened hammer will provide them the ability to have some coverage above and beyond what the settle amount would be. So if we go to the next slide, all E&O policies are different, so you should be aware of this and what type of consent to settle clauses are in place. So for example, most E&O policies contain a hammer clause. There's the hard hammer, which basically means that whatever the settlement amount is, they either accept that or they're on their own, versus an 80-20, meaning that we'll pay, the insurance company will pay 80% of the amount that would be settled, and then the insured would be responsible for 20%. So they would still have coverage if they wanted to take the claim on their own. And then there's the 50-50 and then the 75-25. And then there are some carriers, although it's not common, where there won't be any hammer clause.